monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider monochrome.
Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm Juliette Sarli. Well, hopes for an economic soft landing are once again powering global markets higher. US stocks rose on Friday, extending their biggest weekly percentage gains of the year. The S&P 500 and the Nasdaq notched up their seventh straight session of gains. All three indexes recorded their biggest weekly percentage gains in months, and the S&P 500 and Nasdaq posted their first weekly gain in 5. Large technology stocks were mixed. Chip giant Nvidia and Google parent Alphabet rising, but Facebook parent Meta Platforms dipped almost 2%. H&R Block was a standout, rising more than 12% after the tax preparation company notched strong earnings and forecast fiscal year results above expectations. Shares of Applied Materials were lower, revising its surge after the chip-making equipment firm forecast stronger than expected fourth quarter revenue. Amcor posted a bigger than anticipated decline in fourth quarter sales, the packaging company's US listed shares dropping in the wake of the report. In US economic data, housing starts fell 6.8% in July to a 1.24 million annualised rate, the lowest since May 2020. Building permits slid 4% to a 1.396 million annual pace, and the University of Michigan Consumer Sentiment Survey rose from 66.4 in July to 67.8 in August, the first increase in 5 months. US government bond yields eased, partly reversing Thursday's gains following the data, which highlighted the resilience of the US consumer and a trend toward lower inflation. The US 10-year Treasury yield falling 4 basis points to 3.88%. The US 2-year Treasury yield dipping 5 to 4.05%. For the week, the 10-year yield lost 6 basis points, but the 2-year yield was flat. And the US dollar had been seeing a little bit of weakness, but coming back against the euro and the pound. We have got the Aussie dollar higher against the greenback at 66.7 US cents. Let's get across all things macro. Greg Smith from Devon Funds joining us. Greg, we've got Jackson Hole in focus this week, but it certainly seems like markets are on a bit of a tear.
Yeah, that's right, including over this sort of side. But you think obviously what we saw sort of last week were just fears over the hard economic landing easing a bit, with the retail sales in the US, as you mentioned, the jobless claims lower, and also consumer sentiment, and also inflation expectations in that University of Michigan study. Although it was interesting that confidence depends on sort of what your political allegiance is. It's gone up for Democrats and down for Republicans. But yeah, we've got that sort of soft landing scenario sort of back front of mind. Markets had a great run. It was the best run for the S&P 500 and the Nasdaq the best week since November last year. There will be a lot of interest, obviously, in Jackson Hole. There's one of the few times you can see a central banker wearing a Stetson or a cowboy hat. But is Jerome Powell going to say the right things? I suppose that's going to be of interest. And obviously, amidst the talk about inflation sort of being under control. And alongside that, we have got the minutes from the last Fed meeting, as well, of course, the RBA's.
Yeah, indeed. A lot happening in terms of looking at that central bank action. Let's stick with what we saw from New Zealand, though. There was a bit of a shock that the RBNZ cut well before its own sort of forecast. What's been the fallout?
Yeah, so fallout last week was really, really good. So we're a bit on the back foot today. We're down about 1.2%. But last week, NZ50 had its best week since April 2020. Now, we've really lagged a lot of markets. I mean, we haven't seen the record highs that the US have seen, or even Australia. So there's a bit of catch up there. There certainly wasn't the consensus view. He was going to cut rates. We actually were in that camp. We've been in that camp for a while. And he acknowledged, it was a relatively sort of hawkish tone back in May, but they just acknowledged that The economy has deteriorated further. I mean, there's projections that we're going to be in recession again in the December quarter. So I think really hats off for sort of getting ahead, trying to get ahead of that weakness. A lot of areas of the economy are really suffering. Consumers are on the back foot. Our manufacturing sector, was confirmed on Friday, has been in contraction for 17 months. Unemployment's probably over 5%. And meanwhile, the important thing, and I guess this is perhaps the difference versus the RBA, is that inflation is back under within the 1 to 3% band. So I think that's what's given Adrian Orr, who's the governor, the confidence to go. And going earlier now will allow New Zealand hopefully to hit better growth rates for next year and the year after. So they're targeting around 3%. So certainly was a bit of a pivot from going from one of the more hawkish central banks around to certainly more dovish. But it was needed. And the market's potentially pricing up to another 50 basis points of rate cuts before the end of the year and getting that OCR down to around 4% by the end of next year. So obviously a bit higher than your own cash rate. But markets responded positively last week, but come off the board a little bit today. We've got, I suppose, a lot of attention now is switching towards our earnings season. So we've got 17 companies reporting this week, and there's probably a bit more focus on that and how they're seeing the environment.
Yeah, well, let's start with A2 Milk, of course, dual listed. A bit of a negative reaction in New Zealand.
Yeah, and it is. It's actually weighing on the market today, so it's down over 12%. So it delivered a fairly in-line result, but a bit of miss on guidance. I mean, the positive thing about A2 is they're actually the market in China for milk is declining. We've seen lower birth rates and as a function of COVID and even before that. But they're taking more market share within a shrinking market. So they grew up for milk sales by almost 5%. The overall market was down 10%. So I think that's sort of really, really positive. That they're premiumising their product. They're regarded in the sort of top 5 brands there. And I think that obviously the share price has fallen heavily today, but that said, the shares have had a really strong run this year. One of the top performing stocks on our bourse, so they're up around about 50% year to date. So I think there's a function of that. I think there's a function of some profits being taken off the table. The overall story is very good, and if they get the Chinese birth rate turns around, that's even better news on top. But you're doing well, and I think a lot of profit taking on that, mainly on the guidance as suggested, which was a bit of a miss.
All right, what about Contact Energy? What's been the reaction to that one?
Slightly lower, so around about 1% lower at the moment. So this is our big gentailer. So pretty much in line with expectations. Underlying earnings up 16%. The problem we've got over here for a lot of our gentailers is it's been really, really dry, and that's taken hydro storage levels down to well below historical averages. Flows are very low, and that's also causing pressure on costs in terms of wholesale pricing. So it was a fairly good result despite that, fairly resilient result. Highlight for them and our sector over here was getting a deal over TY and a new long-term agreement there. They've said full year 25 earnings is going to be around 770 million, so that's higher than the 663. This year's that looks pretty good. Shares down a little bit, but they are up around about 6% over the past few weeks. So I think you take that into account.
Yeah, okay. And what else is on your radar then, Greg? Because as you said, it's a busy week, very busy here too in earnings.
Yeah, and just before I get out, we'll just point out that we have had a really strong result over here. So we've had Freightways, which is a company which has exposure to both New Zealand and Australia, and that's Allied Express in Australia doing very well. Volumes up 11%, New Zealand down 5%. So that stock's up around about 1% today. But looking ahead, we've got obviously the Jackson Hole's very much going to be in focus, along with the minutes from the Fed. The RBA minutes will obviously be very interesting, given what Michelle Bullock said on Friday about being premature to talk about rate cuts. But this side of the Tasman, we've got retail sales numbers. We've got another dairy print. That's sort of very, very important. But the big focus this week, Julia, will be on earnings. So beyond today, we've got Mercury, we've got EBOS, we've got Fletcher's, we've got Auckland Airport, and we've got Spark NZ. So lots of blue chips on offer, and we'll have a better idea how a host of industries are doing by the end of the week, and also how they see the outlook, and particularly in the wake of that rate cut.
Yes, okay. Well, a very, very busy week indeed. I'll let you get back to it, Greg. Thank you so much for your time here on AusBiz. Of course, Greg Smith joining us there. And just before we go, we're going to get one final check on where the local market is set to open when trade gets underway in about 5 minutes' time. Futures suggesting a drop of around 0.2%, even though we did see those gains coming through from US markets overnight. European markets, though, were a little mixed. We do have a lot of earnings to digest for our market. Greg was talking about A2 Milk, which is dual listed, not doing so well in New Zealand trade. We've also heard from the likes of Ampol, BlueScope Steel, GPT Group, Iris, Lendlease, Reece and Suncorp, and Westpac has also delivered a trading update. So we'll keep you across all of that and the share price reaction coming up on the open, but that does it for this edition of The Global View.